What's going on, everyone? Today, we're diving into Micron Technology's latest earnings, and let me tell you, these numbers are telling an incredible story that the market doesn't seem to fully appreciate yet. You're looking at a 3.28% drop in pre-market trading this morning, even though yesterday's initial reaction was positive. This disconnect between strong fundamentals and market sentiment creates exactly the kind of opportunity smart investors look for. Micron just delivered a knockout quarter with stunning growth that exceeded expectations across the board. Revenue hit $8.05 billion, up 38% year over year from $5.82 billion, showing the company's incredible momentum. Even more impressive was the bottom line. Non-GAAP earnings per share reached $1.56, absolutely demolishing the 42 cents from the same quarter last year. That's a 271% increase in profitability. Gross margins expanded dramatically to 37.9% versus just 20% a year ago, revealing Micron's strengthening pricing power and operational efficiency. What's driving this remarkable turnaround? Data center revenue tripled year over year, and Micron's high bandwidth memory, HBM, crossed the $1 billion revenue milestone this quarter. This isn't just incremental growth, we're witnessing a fundamental shift in Micron's business model toward higher margin, advanced memory products that power AI infrastructure. CEO Sanjay Mehrotra emphasized this transformation, noting Micron delivered fiscal Q2 EPS above guidance and data center revenue tripled from a year ago. We are extending our technology leadership with the launch of our 1-gamma DRAM node. The forward guidance looks equally compelling, with Micron projecting Q3 revenue of $8.8 billion and non-GAAP earnings per share of 1.57. This represents continued sequential growth and demonstrates management's confidence in sustained demand. Cash flow generation has become a particular bright spot. Operating cash flow reached $3.94 billion, more than tripling from $1.22 billion in the same period last year, giving Micron substantial financial flexibility for future investments. So why is the stock trading down in pre-market after these stellar results? The answer lies in a market that's struggling to fully appreciate Micron's positioning in the AI revolution. Some investors may be focusing on the slight sequential revenue decline from Q1's $8.71 billion to Q2's $8.05 billion, missing the forest for the trees. The memory industry has historically been cyclical, but Micron is steadily reducing this cyclicality through its strategic shift toward AI memory solutions. Many analysts still view Micron through the old lens of PC and smartphone memory cycles, but this overlooks the structural changes happening in the business. HBM and other advanced memory technologies designed for AI workloads now represent high-growth, high-margin segments that are fundamentally transforming Micron's business model. These products command premium pricing and face supply constraints, creating durability in pricing that the memory industry hasn't historically enjoyed. Another concern weighing on shares might be capital expenditures, which reached $3.09 billion this quarter. These investments are necessary to expand capacity for next-generation memory solutions, especially HBM, where demand far exceeds supply. While this impacts free cash flow in the short term, adjusted free cash flow was $857 million. It positions Micron for sustained leadership in the fastest-growing segments of the memory market. Looking deeper into the fundamentals, it's clear Micron is executing at an exceptional level. The company's expertise in advanced memory technologies like HBM3E is becoming increasingly critical as AI model sizes continue to explode. Every new generation of AI accelerators requires dramatically more memory bandwidth and capacity, creating a secular growth trend that Micron sits at the center of. Management specifically highlighted that they're seeing robust AI demand driving record data center DRAM revenue. This isn't a temporary boost, it's a structural shift in the market as data centers worldwide reconfigure their infrastructure to support AI workloads. Micron's technology leadership with its new 1-gamma DRAM node further cements its competitive position, allowing for greater bit density and better power efficiency, both critical factors in AI infrastructure. The balance sheet remains solid as well, with $9.6 billion in cash and marketable investments, providing ample firepower for continued R&D investments. Micron Micron also maintained its dividend of $0.115 per share, signaling confidence in sustained free cash flow generation despite the heavy investment cycle. When you step back and look at the big picture, Micron's transformation into an AI-enabled growth company is unmistakable. With the stock trading at attractive multiples relative to projected growth rates, the risk-reward looks increasingly compelling. Micron has positioned itself at the intersection of two powerful trends: the general rebound in memory pricing and the explosive growth in AI infrastructure spending. The company's guidance for record quarterly revenue in fiscal Q3 and significantly improved profitability for the full fiscal year 2025 provides a clear roadmap for potential share price appreciation. To be clear, memory markets will always retain some cyclicality, and competitive dynamics with Samsung and SK Hynix remain challenging. However, Micron's technology leadership and focused execution are enabling it to capture a disproportionate share of the highest value memory segments. The AI revolution doesn't happen without advanced memory solutions, and Micron is cementing its position as a critical enabler of this transformation. That's it for today, guys, and this analysis is for informational purposes only and doesn't constitute investment advice. Always conduct your own research and consider your financial situation before making investment decisions. Thanks for watching, and we'll see us in the next video.